Hi, Sri Sakamoto with Caliber Real Estate Group here with the October market update. Um, so the big question is, how is the political climate going to affect what's happening in the real estate market, trade wars, presidential election, all this stuff happening? How is it going to affect not only the national housing market, but the Orange County housing market specifically? 42% of the uh, experts are saying that a recession is likely going to happen in 2020. So the big difference between the recession that we had in 2008 and what's likely to be the next recession in 2020, economic slowdown, whatever you want to call it, is that during 2008, the number one and two causes for the recession was the housing um, bust, the mortgage industry meltdown, all of that. What they're predicting, and I don't know if you saw follow us on Instagram, but I posted the top 10 reasons for the next recession, and housing went from being number one and two all the way down to number nine. So this is not going to be 2008. Everybody has it still fresh in their minds and how tragic it was. People lost their homes, jobs, everything. So this is not going to be the same. But if you look back, and we've showed this slide before, but if you look back over the last five recessions, only, well, two, and one was only at 1.9%, where housing prices decreased. Three out of the five housing prices actually increased. Um, Part of the reason that this is going to be different is that you can see that interest rates from December of last year dropped over a percent, and this is 30-year fixed rate. Um, Also, the percentage of your income that is going towards your housing payment, the historic norm is 21.2%. As of July, it's down all the way to 15.7%, down close to 3% just from last summer. So we can afford more home. We have more equity as a country. We have more equity in our home. People aren't pulling out money for crazy reasons. Um, and they're projecting that we're going to continue to see appreciation, not at the rates that we had been seeing. This is these are the projected numbers across the country. So historic norms are about 3 to 4%. So you're going to see in 2020 to 2022, it's going to drop below 3% as a country. But that's still appreciation, right? People are thinking that because their houses aren't appreciating 7 to 8% like they had been in previous years, that it's going down. It's not going down, it's just not going up at the rate that people are used to seeing. Um, so now let's say you purchase a home in if you purchased a home in January of 2019, earlier this year, they're saying that your equity based off of these numbers here, based off of the 3%, 2.5, 2.2%, that over for the next 5 years, you're going to gain $37,000 in equity. And of course, these are just average numbers. Right now, we look at what median asking rents are. So they've gone up tremendously from 2010 from $698 to over $1,000. And of course, these are not California rent numbers; these are national numbers. So we know in California that these numbers are way higher. I get $1,600 for a one-bedroom condo that backs to the 55 freeway. It's insane what rents are going for. So when we go back to should you purchase now? Should you keep renting because you think the housing market is going to crash? My answer is no. Okay. So this is a slide that I showed you last month where it showed that the forecasted year increase in California is 8.5%. They're so optimistic that that number bumped up to 9.1% this month. I think that number is high, but that's what this is from CoreLogic, and last month's was from CoreLogic as well. So same source, same people are saying that prices in California are going to go up 8.5% in September, and now in October are saying 9.1%. So if you're waiting to buy, I I I would probably think twice about that. Um, and here's a graph or a stat sheet infographic that'll show you what it'll cost you if you wait. So mortgage rates are 3.8%. They might even be a little bit lower than that right now. If you purchased a home for $700,000, your monthly payment would be about 3,200. If you waited till the end of next year to buy, you're basically going to end up costing yourself about $300 a month. So I can't stress it enough. If you're waiting for the market to crash, the experts are not foreseeing that happening. So if you want to buy, now is the time to buy. We're going to go over some more local data. So here is information. These are sales prices in Orange County. Overall, the sales prices in Orange County have dropped 2.1%, but that's because places like Laguna Beach, the high-end market has gone down drastically. The high-end market is different than it is for here in Orange or in Tustin, because you can see in Orange over the last year prices have gone up 3.2%. In Tustin, they've actually gone up 8.7%. So that negative number for Orange County is a little skewed by the higher end markets, because that market is not moving. You can see that the average days on market, let's see where it is. The average days on market in Laguna Beach are 77, but if you look at Orange, it's only 24. So again, the higher the price point, the longer property is sitting on the market. This one, I think, is the biggest thing, is that the month's supply. A normal month's supply, or a normal market, is anywhere between 4 to 5 months supply. In Orange, we have less than Orange and Tustin, we have less than 3% months of supply, just meaning that if nothing new came on the market, it would only take 3 months to sell all the active inventory that we have right now. You can see that in Orange, it's down 15%. So if you're looking to sell, you're thinking maybe you want to move out of your bigger home and downsize into something smaller, or the opposite, you want to sell your condo and move into something bigger. Now is a fantastic time to do it because there's not a ton of competition. So this is kind of what's happening in the local market. If you're not in Orange or Tustin, and you want more specific information for your city, just let us know. Hope this information is helpful. If you have any questions, just reach out to us. My cell phone is 714-292-3210. Thanks. Have a great day.